I'm John Bartoletta. Today is February 10th, 2014. Over the last year, the markets have been rallying and maintaining a very tight trading range without a 10% correction. This has concerned us, and we've been in a defensive posture in our portfolios for the last few months, with a 25% cash weighting and at times a protective hedge of up to 12%. In the second half of January, we began a corrective move from the high of 1850 that reached a low of 1737, representing a negative 6% move. This move also violated the 50-day moving average and was followed by a very short-term bounce of roughly 3.5%. Near the low of the move, we removed our hedge positions, but maintained our cash weighting. In new portfolios or new accounts with 100% cash, we have put 20% back to work on the buy side. The markets are approaching a critical level here, and there are valid arguments for both sides of the market, up or down. We can make the case for both. However, we will rely on more data to determine which direction we're going in our portfolios in the short run. The Fed has tapered twice recently, while Janet Yellen takes the lead position this week at the Fed and will speak to Congress for the first time. A new Fed chair is usually met with increased market volatility and pressure to the downside due to the uncertainty that a new Fed chair brings to the position. In the near future, two scenarios could play out. One, the recent rally off the negative 6% corrective move will fail, and we will again put a 12% double down short position back on the portfolios. Or two, the markets will rally through the 50-day moving average, and we will once again test highs, causing us to reduce cash to 5% and chase the rally to the upside. With that said, we feel the first scenario will more likely play out. We would still like to see further corrections of negative 10%, 1665 on the S&P, or a negative 15%, 1573, reached before we resume the rally that began 4 years ago. This would also correspond with our work related to the markets entering a new 16 to 18 year secular bull phase. We'll be monitoring the markets closely over the next few days during this inflection point and report as soon as data becomes available. Have a pleasant week.